All right, there. Once again, ladies and gentlemen, boys and girls, and children of all ages, you're now back in here into the Investor Show. And as we are live today, oh, well, I want to remove that. As we're allowed in here again today, I want to tell everybody: are you having a um, great day so far? So as you're coming in live, give a second for everybody to come in live. But as you're coming in live, feel free to tell me where you're from, and we'll definitely go from there. So, of course, a lot of drama on Wall Street today, and we've seen a lot of great information come out today. Um, so, tell me where you're from as you're coming in. So, real quick, okay, let's go through some of the lives right now that we have. Abraham said, "I knew it was going to dip again." Of course, we're going to talk about that. He's talking about the market is down right now. I think the last time I looked at it, Dow was down 600 points. We're seeing the United States became the largest. Uh, we became the largest consumer, not consumer, but coronavirus cases, confirmed coronavirus cases. Uh, Jobless claims have soared. So we're going to talk about all this. So y'all give me a second. I'm going to say hey to everybody first. Harloon Financial says, "What's up, Doc? What's my man? What's going on, Harloon Financials? All right." Brian's coming in from Hawaii. All right, Brian from Hawaii. What we got here next? Yvonne, hey Prince, great to see you live today. Hey, glad to be back. Yesterday I wasn't live. Miss Lady Senor from Atlanta, Georgia. Nice to see you there, Miss Lady Senor. But the thing about I wasn't live yesterday because I did a show last night in Hawaii. I wasn't physically in Hawaii, but virtually in Hawaii. That'll be up tomorrow. So that's why I didn't do a live yesterday. Proud Dad, he's coming in from Atlanta, Georgia. Al's coming in from Chicago. We got, hold on, I don't want to miss anybody. Beyonce. Beyonce. I can't say that. Mitch from Michigan. So we got Michigan in the house. Shan. There she is. Shan sent me a message on Facebook letting me know how to pronounce her name correctly. Coming in from Memphis, Tennessee. Appreciate it, Miss Shan. Thank you for coming in. Yvonne, I followed your advice and brought SPX yesterday. Waiting on XPL and Jets to dip. Shall I wait? So if you brought XPX yesterday, are you up right now, Yvonne? You should be able to sell that for you should have a decent profit. You might have a little profit in there. I don't know. I don't know how much the market's gone down so far. But yes, if you brought it yesterday, you might have a nice little dip today. Wang is coming in from Chesterfield, Virginia. Pauline is from Brooklyn, New York. She has some beautiful weather. Palm Beach, Florida, checking in. Harlem Financials. Kevin in DC, as always. We got Al. What's up from Arizona? I think he's from Tucson, right? Yvonne says, "Yep, it's up." See, look, she's up. She's up. XPXX. Okay, nice. So in this case, what I would do, Yvonne, like if I had SPXS and it was up, I usually sell it and buy it again. It's my insurance policy. Take the profits and I buy it again. Then if it goes down tomorrow, then you sell it again. If it goes up tomorrow, you hold on to it. I mean, if the market goes up or down. We got I can't even say his name. Bolon, wow, from Henny, California. Okay, Diego, he's from Argentina. Junior B, Junior in Mexico. What's up, big dog, big boss? Okay, Mexico checking in. We got Crawl 808. What's up, Prince? And he's coming in from Texas. All right, so we got a nice little audience in here. Will do. I'm starting to like index funds. Smart lady, right? All right, ladies and gentlemen. I don't know my green screen kind of messing up there a little bit on the bottom. But all right, there, here we go. Today we're going to talk about what's going on in the market today. The market takes a dip. We're going to take a look at some industries. We talked about that dead cat bounce the other day, and all the other great stuff. So as you guys and girls are coming in live, that are catching this live on Facebook and YouTube, be feel free to what you call it. Feel free to comment, and I will get to your questions as we go through them live. So anyway, let's jump straight into it. Let's look at the drama on Wall Street, shall we? So the first thing is we got a couple things going. We have okay, I kind of my screen is frozen, but I think my microphone is still on. We're going to give it a second. Okay, yeah, we're back. Okay, wait. Oh, okay, we got Staten Island, Silver Linings from Staten Island. Miss Butterscotch. Good afternoon, all. Okay. Holding on a little bit longer for McDonald's. Okay, got it, got it. Okay, we're gonna get into all that. So the first things first, let's get into it, ladies and gentlemen, boys and girls, and children of all ages. Just go ahead and get into it. Right now, the market is taking a dip. I think it's taking a dip today of about 600 points. We had a 300-point roar. We had a stimulus. So today, what we're going to do, we're going to sit down and we're going to go through exactly what was happening, right? So why did the market rally? And today is having a little cool off day. And let's see what exactly what happened. And the thing about it is, now we can't use past performance to indicate a future performance, but it will give us an idea. Because if you don't know your history, you don't know where you're going. And to be a student of anything, you got to study the history. And one of the things that I did was I was wondering, ask yourself this question out there, ladies and gentlemen. Is this the first time the president has ever done a stimulus? Right? And the second thing is, if this is not the first time that the president has ever done a stimulus, what happened the last time? Right? How did the market react to the president signing a stimulus package? What did the market do? Were we at the bottom of the market? Were we at the top of the market? Were we in the middle of the market? When they signed it, did the market just turn around and take off and get all this stuff together? What happened? Um, so anyway, that's what we look at it. He said he love them dips. Okay, yeah. So that's the thing about it that we have to look at. So what I'm going to do here, first thing we're going to do, we're going to look at how did the market perform in 2008 when the stimulus package was signed. But don't worry about it, ladies and gentlemen, boys and girls. I've done my research and we're going to do a little screen share. So give me a second to pull that up. Right. So once again, ladies and gentlemen, boys and girls, this is Yahoo Finance. This is Yahoo Finance. And this is a calendar. This calendar is going back all the way back from September 2006 all the way to the financial crisis. This big purple arrow that you see is when this big purple arrow that you see is when President Bush signed $152 billion stimulus package, right? $152 billion stimulus package. And this package was called the Economical Stimulus Act of 2008. It was signed in February 13, 2008 by President Bush. It was approved by the House on January 28th, and it was approved by the Senate on February 7th. It was signed into law on February 2008 to stimulate the economy. Because in February of 2008, the economy was falling. We had hit our peak. You can see over here, you can see the economy had hit its peak. This is around October of 2007. We had hit our peak and we were falling. So boom, they signed a stimulus package, right? This happened in 2008. So February 2008, February 13th, President Bush signed a stimulus package of $152 billion, doing a lot of the same things we're doing today, right? So we see the president talking about cutting checks and he's going to cut checks to people. Is this the first time we ever done this? No. President Bush did the exact same thing, but he did it in a different way. President Bush, instead of cutting checks, he gave the money in tax returns. So in your tax return, when you file your taxes in 2008, you probably didn't notice it, but you got an extra $500 or $600 to help ease the pain of the market, the financial crisis, the Great Recession that we like to call it now. But also President Trump, he's doing the exact same thing, but he's doing the exact same thing in a different way. And his way is he's talking about mailing checks out to everybody. And we talked about that in the last live episode where we talked about $1,200 checks for single people who make under $75,000 and $500 for children. So now I'm showing you this. I want to kind of pull this as we pull this to the right. Let's pull this to the right. This is what the economy looked like when everybody was looking at the economy. The stimulus package got signed, and guess what? It looked like things were getting better. Look at that. It looked like things was kind of starting to go in the right direction. We had hit our bottom, right? We had hit the bottom, so we say, hey, we're going to go up. But no, look at this. Look at that. Look at all of that. Ladies and gentlemen, after the stimulus package was signed in February, like they're signing it today, it's in front of the president. After they signed the stimulus package, look at all this much. We look like we had a little rally, but look at all this falling we had to do after the stimulus package, which was the largest stimulus package that was ever signed in 2008. So you can go back and look at this. This is called the Economical Stimulus Act of 2008. It was valued at $152 billion, signed by President Bush into law February 13th to stop the Great Recession. And you can see what happened after he signed that. We did another sign, which was February of 2009. That was closer to the bottom. So the second stimulus package that was signed under President Obama is what started what we see today as the bull market, started the recovery into as we go today. So, Prince, why are you showing this? How is this relevant? Because everybody got excited because the president has signed a check. Same thing we're seeing with Trump, right? President Trump has signed a $2 trillion stimulus package into, I think, it's on his desk as we speak now. That he's supposed to be getting ready to sign if he hadn't already signed it. And boom, this is going to try to stimulate the economy from falling even further, right? And you can see they did this exact same thing in our last recession, and it kind of goes to my notion of the dead cat bouncing. Just because we're signing a stimulus package doesn't mean everything is over, right? So that's what I wanted to show you guys and girls on that end. Stop sharing my screen on that. So you can see how the economy went back. Okay, let's go back. Let's go back. Let's take a look up here. Let's see what everybody's saying. Everybody is saying who's live. He said he loved the dips. Oh, we got Patrick Clock. He's in the house. What's going on, Pat? He said, "What's up, bro?" Crawford, he said it took time for the market to do a bounce back in 2008. Yes, it did. Kevin, $152 billion only, chump change. The first stimulus was $152 billion. The second stimulus was $787 billion that was signed by President Obama back in February of 2009. So the first stimulus package, guys and girls, I'm sorry, but this probably won't be our only stimulus. We may have to do another round of stimulus. So that's what it was. But you got to think about it too. Look at inflation, and at that time, Kevin, $152 bailout was a lot of money. Now we're doing $2 trillion. Mindy, hi from Texas. I've invested just in the past week. I know nothing about the market except now is the time to buy. What do you think? Okay, Mindy, congratulations. Been a smart young lady, I would think. I don't want nobody to get mad at, oh my God. But for being a smart person, I would say, I don't know if you're male or female, but I would just say congratulations on starting to invest. But I want to ask yourself, you said you started investing last week. What did you buy? What did you invest in? So it's going up. Crawford says, yeah, baby, we're in the trillions on this one. Yes, we definitely are. Max B, that's my guy from New Orleans, Louisiana. Max, also, thanks to Max B for ordering an autographed copy of one of my books in my book series. Definitely appreciate the support. Max B says, so basically the market rallied because people think those checks is going to put us back on track. Of course. And this is the exact same thing what I just showed you, Max. I don't know if you saw our live chart, but our chart showed you that's exactly kind of what happened in 2008 when President Bush did the same thing, but in a different way. He cut checks too. Now we're cutting $1,200 checks. President Bush cut $600 checks, but he put them in the form of tax rebates. So when you file your taxes, if you fell up under a certain amount of money, then you automatically got $500 just from the stimulus. But President Trump, he's getting no checks out now. And I believe he's doing it because it's election season. President Bush, when he did it, he was in his second term. He was on his way out of the office anyway. So he had time to say, hey, let's throw it in the taxes. Versus President Trump says, hey, I can't throw it in taxes. I got an election in November, so we need to get this relief right away. And I'm not trying to discredit the president. Maybe he was more of a sense of urgency, and he wanted to get the checks out right away. But yes. So let's go back. Crawford 808 said the circumstances were different in 08. Yes, they were. The market is very volatile right now. Keisha says, what's going on, Keisha from New York? Yes, it does have some volatility because this is what happens in a bear market. When you're in a bear market, everything becomes so volatile. And what I mean by everything becoming so volatile is that It's so much going on. We got a pandemic going on right now. You're waking up every day and you got politicians and celebrities and different type of people getting the coronavirus, and people don't know when they're going to go back to work. Stores are down. People trying to figure out what's going on. So of course you're going to see a very volatile market right now as people are trying to figure out what is going on. Every day is something new. Bianca, I think that's how you say her name, Bianca. I've been told the market. He said, I've been told to move the majority of my 401k funds due to volatility at this time. What are your thoughts on the bond yields going into the negative? Okay, bond yields going to the negative. That has never been done here in America. That's been done in Europe. That's been done in Asia and Japan, for example. But negative bond yields mean that you're going to be charged to put your money into, a bank. I think that's horrible, right? So, what I see right now with the 401k, if you're a young lady, if you have 10 or 15, 20 years, yes, everybody's saying move your money over to the G fund so you won't have experience further losses. But I'm here to say that I think majority of our market losses has already happened, even though I think we got about another 10 to 20% more to drop or to go. But I think majority of our correcting has happened already. So the market is at about what, 22, 21,000 right now, if I'm not mistaken. I can see it going down to 17,000. So with me personally, make sure in your 401k that you're not selling assets at a loss to jump somewhere else. That's what you don't want to do. Like right now, I have a couple companies that are down in my portfolio. The worst thing I'm going to do is try to sell them, move them to cash, and jump back in them later. No, I'm just going to keep my money right there and stay still. Keisha said that's a fact. We got what's going on, William Voss, down there from my hometown in Georgia. He says hi. What's going on, Will? Okay, so Harloom, he's saying something totally different. So now another key indicator. We just saw jobless claims skyrocket. Who saw jobless claims skyrocket, ladies and gentlemen? So when you say the jobless claims, we're going to go to our handy dandy window here, and I'm going to show you what jobless claims are. All right, where we at? Oh, here we go. All right, ladies and gentlemen, what you see here on your computer screen, this is a news release. This is a news release from the, make sure I got that right, Department of Labor, DOL. This is coming from dol.gov, right? Right here, they released this on March 26th, Thursday at 8:30 a.m. This is yesterday. And right here in the highlighted section, they tell you, right? This is not what a news outlet said. This is not what Prince said. This is coming from the Department of Labor. They're telling you the COVID-19 impact. During the week of March 21st, the increase in initial claims are due to the impact of the COVID virus. Nearly every state providing comments citing that the COVID-19 virus impacts. States continue to cite services, industries broadly, particularly accommodations and food services. Accommodations and food services hit the most. Additionally, industries heavily cited for the increase included the healthcare, social assistance, arts, entertainment, recreation, transportation, and warehouse and manufacturing industries, right? So they're telling you in the beginning, this just came out yesterday from the Department of Labor. Seasonal adjustments. Look at this right here. Read this first paragraph. And it tells you in the week ending March 21st, the advanced figures for seasonal adjusted initial claims was 3.2 million, an increase of 3 million. They had an increase of 3 million initial claims. What are initial claims? These are people that walk in and claim for unemployment benefits, right? These are just claims. These are not verified. These doesn't mean the people are what you call it, but they've seen a 3 million push, right? In the previous week. This marks the highest right here. This marks the highest level of seasonal adjustment in claims in history of seasonal adjustments. The previous high was 695,000 on October of 1982. So just last week, this is coming from the Department of Labor. Every Thursday, they put out an initial claims report of people who go out and claim for unemployment, and they said they saw a shot up of 3 million in the past week, right? This is what they're saying, right? They put this out yesterday. The stock market went up 1,300 points. Grab a little water. Why did you think the stock market go up 1,300 points, even though jobless claims had gone up 3 million? 3 million claims. Now, the bad thing about this, or to cite this, jobless claims does not include initial claims, right? It doesn't just include people who've already been on unemployment, right? It just pretty much is a broad number to say across every state, every city, they had a 3 million people increase from the week before of people that came in for jobless claims, the highest ever. That post highest that came from the Department of Labor, right? And I just showed it to you guys and girls, where you can go look the information up yourself. And this comes out every Thursday. I'm teaching you guys and girls how to fish, so you can see this, and you don't have to worry about what CNBC said, what Yahoo Finance said, what Forbes said, what the old person said. This is raw data. This is where they're getting their information from. This is directly from the Department of Labor, and they're telling you, hey, we had the highest we ever had was 1982, before I was even born, which was 695,000 of initial claims. This is the highest one they ever had. It's 3 million, 3 times the highest of the high. People walked in from across the state and made unemployment claims. But yet it's still, the stock market went up 1,300 points. Now, just because you made a claim doesn't mean you will get unemployment, right? Now, there's a difference between jobless claims and unemployment numbers. So here we go, ladies and gentlemen. We're going to talk about unemployment numbers. Unemployment numbers come out every week. They come out every Friday. They come from the Bureau of Labor, BOL, Bureau of Labor Statistics. They put out every month, the first Friday of every month. The last one came out March 3rd, the Friday, and the next one comes out on April 6th, Friday, April 6th. This is what you're going to get. I'm going to show you guys and girls exactly what that looks like. This is where we get our unemployment numbers from. And we all, the reason why unemployment numbers are so important, because unemployment numbers tells you how your economy is possibly performing. So right here, ladies and gentlemen, you are looking at the U.S. Bureau of Labor Statistics. They put out an economic news release, right? It's an employment situation summary. As you can look at this one came from February. I'm just showing you what it looks like. This one was the February employment situation. It was released on March 6th, Friday, March 6th at 8:30 a.m. Eastern. So 8:30 a.m. Eastern on Friday, April 6th, we're going to get the employment situation for April, right? And this goes through and it tells you everything. This comes from the U.S. Bureau of Labor Statistics. This is not what I said or some news outlet said. This is raw data. So it tells you right here. It tells you, read this first paragraph. Total non-farm payroll employee rose by 2.73 in February, and the unemployment rate was little change at 3.5%. This was for February. The U.S. Bureau of Labor Statistics reported today notable job gains occurred in healthcare, social assistance, food services, drinking places, government, construction, professional and technical services, and financial activities. Just ask yourself, this is February. This is what they said happened in February, the employment situation, when we hit our all-time high on February 12th. Now ask yourself, what do you think this report is going to look like on April 6th? Right? And what would it do to the market? Employment is very important because it could be the signs of a strong or weak economy, ladies and gentlemen. Oh, did I say Kevin said I said April 3rd? Is it? Hold on. Did I do it? Let me look. Let me verify. It might be April 3rd. The first, whatever the first Friday is in April. You're correct. I was wrong. It was March 6th when it came out for our last economical situation. It's going to be April 3rd. You are definitely correct. So here we go. Here we go. Here. Let's take a look. Let's take a look at some of you guys and girls' comments. Junior B, is it time for calls or puts for short term 60 days or less on inverse ETFs? Now, this is the thing about calls and puts. Those are options, everybody. They have expiration date. So your timing has to be a little bit more on point when you're looking at buying calls and puts. Now, in an inverse ETF, right? On an inverse ETF, your timing doesn't have to be that great. So let's say me, for example, I have XPXS. I bought it on Monday. The market went on a 3-day run. It don't matter. I just hold it. I hold it until the market does a week from now, 2 days from now. I'm not worried about an expiration date. I don't have to worry about the Greek symbols, the theta, the delta, time decay. Those are things which, when you buy calls and puts and options, they could be more profitable for you, but your timing has to be a little bit better, right? But right now, the market is roaring, and looking at this data coming around April 1st, April 3rd, I mean to say April 3rd, with this unemployment report is coming out on April 3rd, because let me see. Do we even get another jobless claim? Let me see. Let me double check here. No, we don't. So next Friday, ladies and gentlemen, next Friday, the unemployment situation will be released by the U.S. Bureau of Labor. That's what we're going to get next Friday. And we're going to get new unemployment numbers. We're going to see the job situation. And we kind of already got a taste of it by looking at the jobless claims of yesterday. So I want to see how the market is going to react when unemployment hits. So I'm going to wait on that. The second thing is mid-quarter. We're going to get into what's next mid-quarter, but let's go through the questions. So that's my thing on that. Kevin, I heard current cruise lines out at sea can't find a country to port in. It's a mess. That makes me feel uncomfortable in investing in cruise lines. Your thoughts? Yes, too early. Too early. Wait, too early. It's better. Okay, she's talking to somebody else. Okay, Al. 2008 market had not dropped much by the time the first stimulus passed. Second stimulus passed when most of the fear and damage had been done this time. The market has already seen fairly a significant drop so far. You are correct on that, because the market dropped so fast. See, in 2008, the market started, it hit its peak in October of 2007. And then it's kind of slowly October, November, December, and came January, Congress started to step in. February, the president signed the stimulus package. You're correct. Just last month in February was at our all-time high. And here we are down, 30-something percent already within a month. So, of course, the stimulus package had to kind of come up and catch up. But we still haven't even seen the damage, right? The U.S. today just became the largest case of COVID-19. We became the largest case of COVID-19. We just saw what the the jobless claims report looked like, right? And then now we haven't even seen the corporate earnings report, Al. We don't even know how much we've done. She said, I skipped some questions and comments. Hold on. Miss Butterscotch said, I skipped some questions and comments. I don't think I did. Did I? Oh, my bad. I'm so sorry. I didn't even see that. When my thing updated, it just shot up, and I didn't even see that. I'm so sorry about that, ladies and gentlemen. Let me go back and see where I left off at. Right now. I'm sorry, y'all. Consumer confidence. You're right. Consumer confidence was at an all-time low, right? That's what kind of drug the market down today. Consumer sentiment. And we should know consumer sentiment will be down. We're in a very uncertain time right now. Kendrick says he expects one more stimulus. Exactly. I don't think we're going to get another stimulus, too. I think we're going to get one now, and I think we're going to get another one later on, because we don't know how long we're going to be in this. Keisha said, I think another stimulus coming. Yes, we did 2 stimulus in 2008. Balloon said, I dip, you dip, we dip. I'll put my hand up on your hip. When that's a funny, that was a song. That was a song that he's talking about. He's talking about market dip. So that's pretty funny. Max B, they're going to have to do more stimulus if they don't control the coronavirus. Yes. And I don't even think, you just looked at the prime minister of the UK just came out and he got the coronavirus, right? And I'm surprised they told people that, to be honest with you. I probably would have been like, yeah, we're going to hide him off a little bit. But I'm shocked that they told that pretty much the president pretty much has, some people call him Euro Trump, has a coronavirus. And more people got it. I mean, cases are popping up. Now we got more cases. We have more confirmed cases than Italy and China now. So we don't even know how long this is going to last. So this first stimulus may go for, let's say, if we still on lockdown come May, what's going to happen? If we still on lockdown come May, what is automatically going to happen? Right? What's going, it's going to have to be another stimulus. Great, you gave me a $1,200 check, but rent still due. Miss Butterscotch said, "How can we order an autographed copy?" Okay, to order autographed copy, how Max B did it, he DM'd me on Instagram. But what you can do, send me an email to Prince, PRINCE at childrenfinancialliteracy.org. Now, I have to give a caveat. I don't have that many hardcover books on hand right now. I have about, let me see, I think I got about 4 books left on hand, hardcover. I'm in the process of restocking. Right, I gotta order some more to get some more on hand, but I do have about 4 copies. I think I have 1 copy of my first book. I think I got 1 copy of each book in another one. So I'm very limited on how many I have. But if you send me an email, Prince at childrenfinancialliteracy.org, I will respond with you and I will send you an invoice. Right. And once the invoice is cleared, I'll autograph it and go to the post office if they let me. And I'll make sure they get shipped off to you. So, yeah, that's the way you can do that. Kendrick said, "I'm just waiting on Buffett to bail out the cruise lines." I don't think Buffett's going to do it. I don't think Buffett's going to bail out the cruise lines. I think Buffett's going to wait on the government to do it. Why spend my money? I mean, the rule number one in investing, why spend my money, spend somebody else's? Why would I go ahead and bail out somebody when the government, Kendrick, they just did a stimulus package. They just allocated $500 billion for struggling companies. So if I was an investor into your country and your company, Kendrick, let's say if you had Taylor Cruise Lines and I'm your backer, and you call me and say, "Hey, Prince, man, can you let me borrow $10 billion to bail us out, whatever?" First thing I'm going to tell you, man, have you applied for the free money the government is giving out at a very low interest rate? Congress just signed a $2 trillion bailout plan. What you calling me for? You better call it in first. Go over there and get 10 billion. That's what I would tell them. Harloon Financials, do you think a lot of everyday companies that we are going to go out of business because of the shutdown? Uh Unfortunately, yes. I think, that's just a hard fact. I mean, restaurants will pretty much never be the same. I mean, like you look at somebody like I don't think some of them are going to go out of business, but some of them will hang around. Look at Chipotle, for example. They have to dumb down their staff so much, not dumb it down, but cut back on their staff so much. They have to cut hours. I mean, it's just a fact of doing business. Look at the gyms. Look at all the people that work at gyms. Nobody has been going to a gym for the past 2 weeks, and they got another month of that. So how are you going to simple business? How long are you going to be able to keep paying people just to sit at home? Miss Butterscotch, I think this stimulus is going to be a loan from our taxes. Yeah, they turn on the printing machine. Patrick said facts. Yep. Bianca, I've been told to move the majority of my 401k. I think I went over that one. Okay. I missed some. Keisha, it's a fact. William said hi. Sorry, y'all, I'm kind of jumping over the comments. Okay, 2008. All right, here we go. C Lane, why is the media saying that we are out of the bear market? Barnes reported it as well. Well, they're probably looking at when we hit the bear market is 20,000, right? So when we ran up a little bit, that probably put us out of the technical data. So some people are saying, "Hey, we're out of the bear market." I never seen in history. I studied pretty much every market crash. I've talked to people that was around those market crashes, that was in those market crashes, and I never the fastest recovering bear market we ever seen was a 1987 crash. I think we was in that crash for 6 months. That's the fastest one that I've seen. Now, if there's something out there fast that I don't know of, please let me know. But Trump is going to go down as the greatest economist of all time. If the bear market is over, it's going to be the greatest economy of all time. But I don't think we've heard about everybody's uncertain, but wait till that data hit. When those unemployment numbers start to show, when these corporate earnings season kicks off mid-April, ladies and gentlemen. I wanted to bring that up to you guys too. Earning kicks off in mid-April. And what I mean by that, earnings season, people like to call it a season because it's really like that's when everybody's going to start reporting their quarterly reports. And then on those quarterly reports, that's when we're going to see how much damage has really been done. Now, it could go back and shock me. It could go back and shock me and say that let's say we don't get hit as hard as we do. But I think when we start to see how much money the corporations lost, when I see these unemployment numbers, and this is the thing about waiting, I'm just going to get into this. William Voss commented and said, "Wish I brought into Boeing. LOL. Last week it was $89 a share. Now it's way up." This is the thing about it. I'm going to tell you guys something on that. It's called a fear of missing out, William Voss. I want you to listen to this story. Everybody tune in real close and listen to this. Berkshire Hathaway costs about 300,000, 200 some thousand. I don't know the exact price right now. It's right about the $300,000 range or the high 2000s. That's how much it costs trading for today, Class A. I met people that brought Berkshire Hathaway when it was $1,000. I met people that who purchased it at 2,000. I met people that purchased it when it was around 50,000, right? And all those people today that is up to 200,000, and you sit all those people down into a room and you ask them, "Hey, how do you feel?" None of them says the person who bought it for 50,000. He doesn't say, man. He doesn't look at the guy who bought it for 10,000 and say, man, I should have got it for 10,000. The guy who got it for 10,000, he's not looking at the guy who got it for 1,000 and saying, man, I should have got it for 1,000. No, he's not. Right? All of them are happy. They're happy because guess what? I got on a good company. Same thing with Boeing. If you got it for $90, great on you. But if I wait for financial data to come out, and let's say if Boeing shoots up to $200 and I get in at 200, and let's say if Boeing goes off and shoots up to 800, I'm not going to cry with spoiled milk. So don't be overly concerned with trying to catch the bottom. That's how so many times you jump in a rally. Look at Boeing. Boeing went down with 10, 11% today. So just wait. So I like to look at things, and I did that before where I saw like, man, I feel like I'm missing out. Then I jump on it because I think man, I could have got it for $90. Now I got to get it for 180. Don't worry about it. Boeing was at $300 before all this mess started even happening. So you automatically know at a minimum, it can go easily back up to over 300, almost 400. Boeing was almost 400. So if I have to wait and get it at $220, is that a bad buy? No. Patience. More people get in trouble with the fear of missing out than anything else. Their emotions take control. You feel like you're going to miss out. Just yesterday, you jumped on a bunch of stocks because you saw the stocks run up 3 days in a row. And then now if you look like, man, I bought Boeing yesterday. Now I'm down 10, 11%. I could have just waited. Al, market may slide a bit more, but nobody knows sure. Media is driving a lot of fear as well. Media makes a lot of money during this time. Media makes a lot of money. Financial media makes a lot of money, Al, during this time. So nobody cares when the market is going sideways. Nobody cares when the market is doing good. Everybody cares when tragedy happens. That's what we love. By our natural state, we're negative people. People are negative in general. And I can admit that because guess what, right? Negative drives energy, right? Think about it. Prince Dykes graduates with an MBA from college. Everybody goes, oh, okay, cool. Prince Dykes was found out to be a scammer and gets 10 years in prison. Spreads like wildfire, right? So, and naturally, we love negative stuff. Negativity, negativity and chaos, it was drives media, what gets people attention, right? So it's a thing in media what they say, if it bleeds, it leads. So if something is bad, if something, a car wreck, a murder, a stabbing, that gets the first amount of press because that's what people want to see. We turn the news up when we hear about that. A little kid that can say his alphabets backwards, that's a little boy genius. Oh, that's cute. We turn the TV down. But when it's drama and people catching this pandemic and this virus and the market is running all over the place, the media really likes to sensationalize that because that's what keeps people tuning in. That's what keeps people clicking on ads and everything. Now you try to call TD Ameritrade. Everybody's trying to get a TD Ameritrade account. Everybody's trying to get an ETrade account. Everybody just tune in to shows like this as they sit at home and they want to watch the drama unveil. So media does do a good job of sensationalizing it for obvious reasons because it's profitable. Miss Butterscotch said, I think it will drop again. Yes. I think we have a greater chance of it dropping again than going up again. But this is the way I look at it. If the market goes up, I'm not mad at it because majority, 97% of my portfolio, I'm riding the bull. I'm going long term riding the bull. But guess what? I see the bear. I'm on the top of this bull to visualize it. I'm on top of this bull, riding this bull, but I see this bear out here running around. I want to take advantage of why he's out here running around. So about 3% of my portfolio is allocated to a downturn. Because if the market turns down, I'm going to hold on to all my bullish stuff, try to take advantage of the bear, and pick up some more things along the way. Al said, I have a strong real estate portfolio, which is a great cash flow, but I've also been adding to my index funds as they seem to have been dropping. But if you have the spare cash when they're low and low, when they're low and lower, I mean what he's meant to say. So yes, he's 100% right. He has a cash flow from his real estate property, right? He maybe rents out a property or whatever the case may be. But I think real estate is next, Al. Because right now, if someone is living in, say if you have a tenant, are you really going to kick a tenant out that can't afford to pay their rent right now? And if everybody's unemployed, how can you, if everybody's unemployed, how can you, right? If everybody's unemployed, how can they pay rent? How can they pay their mortgages? Dollar cost averaging is key. Yes, guys and girls and ladies and gentlemen, boys and girls, dollar cost averaging, he's speaking of. You buy the same exact thing over and over and over and over. So you buy the index today, you don't worry about what the price is. Say on April 1st, you buy the index, you don't care what's going on. And you just keep buying it over and over and over and over. That's what's dollar cost averaging. Whether the market is going up or down. Okay. A bunch of comments just jumping in at one time. Okay. He said, everyone watching, 43. Oh, Al saying 43 people are watching. Now he's saying 53 on my end, Al. 53 people watching, 7 thumbs up. Yeah, give us some thumbs up, and I appreciate that, Al. And Kevin said April 3rd, not April 6th. You're right, Kevin. I was wrong. It's April 3rd. Next Friday, the unemployment numbers come out, which comes out every month, coming in from the Bureau of Labor Statistics. Joseph. I know Irk. Do I know you, Irk? I think I know you. Prince, when do you expect a better buy in the housing market? I think later on this year, you're going to get better buys. I think that I haven't seen real estate or seen anything on real estate kind of decline, kind of at a standstill. But I think you're why I'm in the housing market myself. I want to buy a house this fall. So I'm waiting myself. Elijah said, I think the market will plummet based off those numbers. Exactly. He's talking about unemployment and whatnot. Max B, would it really hurt if we all know why we lost jobs and that we can possibly make it back? I don't kind of understand what you're saying there, Max B. You said, would it really hurt if we all know why we lost jobs? I think he's saying that, hey, we know that everybody's going to lose jobs. That's one of the things. People could look at that and say, yeah, we expect those unemployment numbers, but we got stimulus checks. We're going to be fine. But it could come out to be worse than what's expected. Steven Johnson, what's your take on Trump keeping the? I didn't see that. What's your take on Trump keeping the? Okay, I don't know what to risk it on that. Keisha, I don't think he got it. Go it. I think she said got it. Lies. Okay, I don't know what y'all saying about that, Keisha. Kendrick, it's no way China's reporting real numbers. That could be true, but all I can go off of is data. People lie, numbers don't. But if they don't report them, I don't know. Right? Okay, here we go. Steven Johnson says, what's your take on Trump keeping the cruise lines out of the stimulus package? He didn't really keep them out. Yes, you can say he kept them out, but he put, from what I saw in the stimulus package, correct me if I'm wrong, it was like $580 billion that was set aside for companies to be bailed out on. And the only stipulation that I saw on that was Trump and his family and his connections couldn't get federal aid. That's all I saw. I didn't see anything saying cruise line, you can't get any money. So by him putting 580 billion, he didn't say only for transportation industry. He said 580 billion for companies that are struggling. Okay, Jason White, 9. Jason White, the reported numbers have no true baseline. Can you explain that on that, Jason White? 9, Jason White? Miss Butterscotch. Okay, well, hold one of those 4 copies for me. Oh, okay, cool. Oh, thanks. She's saying hold one of the copies for her other books. I definitely will. Kendrick Taylor, is basically flat, not a downward trend, just flat. They didn't approve. They didn't approve cruise lines. But but when I saw the stimulus package, y'all correct me if I'm wrong here, right? I didn't let me pull it up here. Correct me if I'm wrong, but it was like a let me see, Google inside of the stimulus package. Ladies and gentlemen, I'm just trying to pull up a look inside the stimulus package. I think this is called 2020. Okay, the Corona Relief Bill. Okay, let's take a look. Let's see what Politico has to say. Now, give me a second. I'm reading inside of the stimulus package, right? What's inside the $2 trillion stimulus package and what's next? So, granted, this is not raw data that I had time to look up, but we're going to take a look at it. Okay. Okay. People who are unemployed get an extra $600 per week up to 4 months on top of the state of unemployment benefits to make up 100% of wages. And they agreed upon an extra month of unemployment. Loans to industry, what they got. The Treasury Department would divvy up $500 billion pot of loans to struggling industries like airlines and even cities and states. Okay, so loans to industry, $500 billion. I thought that was what it was, like $580 billion. It says the Treasury Department would divvy up $500 billion pot of loans to struggling industries like airlines and even cities and states. Why it matters? Rules added to the bill will order inspector generals and accountability committees to oversee how much money is spent, rather than giving the Treasury Secretary Stephen a broad power to cut the loan checks. Veterans Act 2000 bill says blah blah blah. Okay, so right there, I don't see anywhere hospitals will get 100 billion. I don't see where it says, okay, here it is right here, aid to airlines. Well, don't say cruise lines, but 500 billion to airlines. So state and local government, Pentagon, 10 billion, aid for insurers. So right here, up under loans to industries, what's stopping the cruise lines from getting a loan to industry? Cruise lines, right? I don't see it say when it says loans to industries. I don't see where it says, "Hey, you can't get anything." Okay, Stephen Jack Johnson. Okay, what's your take on Trump keeping the cruise lines out of the stimulus package? I don't see. Please let me know if I don't see where it says no to cruise lines. I did see where it bailed out airlines, but maybe that industry directly. But why can't cruise lines apply for the $500 billion pot? Is there something particularly outlining cruise lines? If so, that doesn't make sense. I had to look into that to see why would you say no to cruise lines, but say yes to airlines. I had to look into that. Keisha's saying Q1. Yes, Q1 earning reports. Q1 earning season. 1 second, ladies and gentlemen. The Q1 earning season starts mid-April. Let's take a look and see how that's going to look. Al, the problem with the cruise lines is that they operate out of country and they don't pay taxes. If they bail them out, America has to gain something. I get what you're saying, but Al, it could be that bailout money could be Maybe they're employing American people, right? Maybe they're employing American people, Al. You've thought about that? That could be something. If you bail me out, I won't lay people off. Of course. He said, the tech monkey says, will you hold investing for a week or two? Yes, of course. We got unemployment numbers coming out next week. We got earnings reports. Earnings season, Q1 earnings season is going to start around about mid-April, going all the way. They're going to last for about a month. I want to see what that looks like before I start to get crazy into investing. James Bond, you're right, James. 450. They did. Boeing did reach 450 per share. When this started, I think it was around 300. So, James. William Voss said, great story. Thank you for sharing. Thank you for sharing. Yes. When you fast forward 10, 15 years from now, people are not going to say, man, I could have got, said Boeing goes up to $1,000. The person who got it for 100 and the person who got it for 300, I don't think they're going to be kicking themselves like, man, I could have got, instead of 300, I could have got it for 200. And the person who got it for 100 is not going to be saying, oh man, I got it for 500. So don't get caught up in the fear of missing out. James Bond, the market is doing a dead cat bounce. Oh man, the dead cat bounce. Who remember the dead cat bounce? I brought that up. I posted it up on my Instagram and everything today. Okay, cool. Yes. So, good thing is, guys, we're going to have Yahoo Finance editor in chief. I just saw the email. They just confirmed they will be on the show on Wednesday. Give me a round of applause. We had the editor in chief of Yahoo Finance, Mr. Andy Soar, coming up on Wednesday. On Monday, Wednesday, he's coming in on the show, and he's the guy. Andy Soar is pretty much the top editor. He's the editor in chief over at Yahoo Finance. He does all the writing over there, all the hiring and firing. And he sits down with. He's the guy that you see do all the that does all the interviews with Warren Buffett. So he's the one that goes to Omaha and get all the exclusive stuff with all the people in the industry. I mean, he's pretty big. So glad to have him back on the show, Mr. Andy Soar, a good friend of mine. He just confirmed that he will be on the show on Wednesday, right? So y'all check out for that. And the second one will be Meta World Peace, NBA champ for the Los Angeles Lakers. He will be on the show on Monday. So he's supposed to be streaming in on Monday. He's supposed to be on the show. He confirmed with me right before I came on that he'll be on the show on Monday. And we're going to be talking about, I think he made over like $40 million in his 18-year NBA career. And I want to know, what did he do with it? Did he invest it? How did he invest it? What is he doing now that he's retired from the NBA? So y'all stay tuned. Nice little week coming up. So we got Yahoo Finance on Wednesday, and we have Meta World Peace on Monday. Al said, if it bleeds, it leads. Very sad. Yes, that's what the media does. They're going to sensationalize this drop because Wall Street make money when you buy and sell. They want to see you buy and sell. So anything, if you buy and hold, they don't care about that. They want you selling. They want you to, oh man, you looking at Boeing like this. Oh man, I gotta get some of that Boeing. Oh, it's going up again. Boeing. Oh my God, Boeing. Oh, I gotta get it. Calm down. Calm down. Ghost Hunter said ETrade customer service is sucking bad right now. Yes, a lot of brokers are having a hard time right now. Wesley Green, hi everyone. If you owe the IRS, would you still receive a stimulus check, or would that go towards your debt? Why would you want, if I owe the IRS, have a check, please get rid of me. I'm not sure if they will cut you one, but since it's coming from the same place, I don't think they'll give you one. All right, let me get into some of these comments. All right, I'm gonna speed up a little bit. Al, I own a note, not the mortgages. Oh, nice. He's talking about his real estate. Okay. Proud Dad IMF chief said on Friday, that's the monetary fund. I can't think of it. On Friday, that we were in a recession. Yes, plenty of people told us we're in a recession. We've been in recession for a while now, ladies and gentlemen. I'm dollar cost averaging on Zoom. Yes, Zoom is doing very well. I think Facebook is going to do very well. People are home. Facebook is going to do very well. Zoom is going to do very well. Costco's, Walmart. I think a lot of these online companies are going to Zoom very well because everybody's on Zoom. Everybody's using Google conferences to do business meeting. So yes, I think Zoom is going to surprise people earnings season. I think Facebook is going to surprise people in the earnings season. I think that so I wouldn't be afraid to do a call on Zoom, right, for their earnings because I think they're going to do a nice like now bet on their prices in the future. Especially, I'll wait to see if we're going to do a nice dip. And I wouldn't mind getting a call on Zoom uh, and things like that. Steven Johnson said Ron Washington. Okay, from Facebook. Nice, nice. Tech Monkey, what is your recommendation? Less expensive indexes to buy for a beginner for a long-term investment. The cheapest index fund I know is Sierra Whiskey Papa Papa X-Ray. Sierra Whiskey Papa Papa X-Ray. That's SWPPX. That one is about $40. And now TD Ameritrade, I think the fee. Be careful of the fee of the platform you use. Some platforms have a ridiculous fee like TD Ameritrade is charging like $49. So that's crazy. ETrade, I think, is still free, but just that's the cheapest one. But if you use Charles Schwab or whatnot, be very careful of your broker's fees when you buy it. But that's the cheapest. That's a Charles Schwab S&P 500 index. Tracy Walker, how you doing, Miss Tracy? How do you feel about pre-built portfolios? I don't like them. I don't like pre-built portfolio like life cycles and things like that. They usually don't outperform. When you compare them to the S&P 500 index, they usually don't beat the index. They may have a 1 year, 2 years, but when you stretch them out over 10 years, most of them don't beat the index. I don't like pre-built cookie cutter portfolios like growth. Here you go. It's great for a starter, but I think you do much, much better if you just got the index. All right. This is Mr. McDonald. What's going on? Why do investors keep talking about unemployment? Why is that good for us? Okay. Unemployment is a lagging indicator. This is a lagging indicator in your economy because as an investor, what you're becoming or what you already are, or which everybody in here is, because if people are not working, that means people are not spending money. So it's like, say if you own a company, okay, let's say if you own a bookstore, right? I'm trying to think of another industry. Let's say if you own a bookstore, and I know the warehouse where you get your books from. I don't even have to look at how many books you're selling. I can just look at your warehouse and get a good indicator of how your future earnings will be. Prince, how is that? If I go to the warehouse and they tell me, hey, we're laying off people and we're not working that many hours, I automatically can assume that your business is probably going to suffer. Because if they're laying off people and they're not making that many books, how can you be selling anything? So, Prince, how does that relate to unemployment? If people don't have jobs and people don't work, I know that's going to show up on people's earning reports. Less people are going to go to the movies. Less people are going to go buy a car. If I had no income, you think I'd be worried about buying a house? No, I wouldn't buy a house. Or I wouldn't be thinking about that big purchase. So when people don't have money, the less money they spend. So if I don't have money, I'm not gonna turn this live off and go to Chipotle. I'm gonna think about eating a box of cereal up in my room or eating some ramen noodles. So people spend less. And when people spend less, that slows everything down. That family's not going to buy that new car. That family's not going to go on vacation. So guess what? That's going to show up on other people's books. That's why people pay very close attention to unemployment. Because the only reason, and as an investor, you're looking at a company's ability to make money over time. How can a company make money if people are not spending it? And how can people spend money if they ain't got no job? See that domino effect? That's why unemployment is important. Does that make sense? Let me know if that makes sense. Max B, do you think interest rates will go negative? Woo, man. I mean, that's the only step we got next. Interest rates are at an all-time low, the lowest they can go, right? This is the lowest they've been since 2008. So yes, I don't. They can go. Do I think they will? No. That'd be horrible for Trump's presidency to go negative, right? She said, "Hi, Wesley." Yep, he's up. He's upstairs. I'm in here, Dad, homeschooling him. So Wesley's upstairs. B Mac, what's going on? He said, "What's up, Prince?" Brian's in the house. Kendrick Taylor says, "Nah, they didn't keep them down. Our senator wanted the stipulations for them to be American based." Come on, why y'all ask me that question for? That makes perfect sense. Of course, the senators wanted The only people to get bailouts were American based. Example, ain't nobody in Japan bailing out no companies over here in America too funny that I know of. So of course, before you can worry about somebody else's stairs or steps, before I go over there and worry about my neighbor's front door, I might want to worry about mine first. So of course, I can understand why they don't want to bail out the cruise lines, because the cruise lines are saying, "Hey, if you're not American based, why would we give you taxpayers' dollars when we got our own problems?" Makes perfect sense. I agree with that, Senator. The cruise line industry should not be bailed out, including in our stimulus. Most, if not all, are based in other countries to avoid taxes in the states. So let them help those. You're right. You're right, Miss Butterscotch. Y'all right on it. They left a loophole. Basically, if you carry over 8 passengers, blah blah blah, so they're going to get some. Always a loophole. Okay, nine, Jason White. My comment was with regards to the number of confirmed cases per country. I feel like it's impossible to state the true number unless every citizen is. You're right. You're right. You're right. You're 100% right, because what he's pretty much saying is that everybody hasn't been tested. So I could be walking around here with the coronavirus. My son could have a corona. My wife could have. We haven't been tested because we don't meet the criteria to be tested. So he's 100% right with saying that. Hey, um, everybody hasn't been tested. So what are those numbers based off of? Aaron, a lot of companies are doing virtual shareholders meeting. You think they will be the new wave of no one showing up anymore? Um, Depending on how far this goes out, you're right, because Berkshire Hathaway, which is the largest shareholders meeting, they're pretty much doing a not a they're pretty much doing something virtual via Yahoo Finance. So Yahoo Finance, I think, is going to be putting them out this year, and I'm glad that he's going to be on the show on Wednesday. So yes, I think that's correct. I think that but no, Berkshire. If we can get people around, that's like, let's take it deeper, Aaron. I would tell you about this about Berkshire Hathaway and about other companies shareholders meetings. That's the largest, probably like one of the top two or three largest events in the city in the state of Nebraska, right? So having 40,000 people pour into a city, I don't think Buffett wants to do that. More shareholders, because he has 40,000 people coming into his city. Think about all the bookstores. Think about all the restaurants. That does a lot for an economy. So if everybody just went online, a lot of companies, like look at Chili's. I had the CEO of Red Robin's on this show, right? She's no longer the CEO anymore. I think she just stepped down not too long ago. But she was the CEO at the time I interviewed her. And she said, "Hey, what's hurting Red Robin's is that we're located near malls. As malls lose traffic, that takes our traffic. Not too many people wake up in the morning and say, Red Robin's. Most people go to Red Robin's because they may be shopping all day at Costco's. So on the way home, they may stop at Chili's or Red Robin's or whatnot. But if the mall loses its traffic, then that means that things like Chili's and Red Robin's, they lose their traffic. And why am I saying this? Those shareholders meetings are huge for, those big shareholders meetings are big for local economies. So those local restaurants, think about how much money comes into the city of Omaha just because of Warren Buffett's annual meeting, right? I don't know the exact figures, but I know the owner of the steakhouse that Buffett frequents. I've interviewed the owner. The owner's been on this show before, and he said, "Hey, I pretty much can make up. It's people in Omaha that they travel 2 hours just to work that weekend, just to be a waiter for that weekend. Because guess what? He hires a bunch of staff. A bunch of staff comes in. That's kind of like the survival of his business is that shareholders meeting. So just looking at the shareholders meeting, yes, it's easy, but you got to look at the effects that it does to the local economy, right? Mr. McDonald, how does the injection work? Will this pay forward the 580 billion right away, or will it be dispensed throughout the years? Now, the 580 billion that you're referring to, I think you're talking about the loans to industries. That's a pot of money that they're putting there for companies that have gone into bad problems. They can apply for. So the companies, I'm pretty sure it's probably some type of application, and they got to do some type of qualification. And they have to apply for it. But some companies, right? I would tell you guys this backstory. I don't want to say the company's name, but it's a Fortune 500 company. And what it did was we had negotiated a deal for them to do something with my foundation before the coronavirus came about. We hadn't got the check until after the coronavirus. So we were kind of not really worried, but we was kind of expecting that they was going to pull back or renege on the deal, because they're going to say, hey, look, we were supposed to do some things in schools and boys and girls clubs. So of course we can't do that now. So I thought that, hey, they was going to pull back their sponsorships, their agreements, but they said no. We want to give it to you anyway because we know this is a hard time. Blah blah blah. So they paid it for it anyway, and they probably paid it for because they're one of the companies that qualify to get a bailout. So they know they have something on the back end as well. So you become a little bit more lenient. So I don't think it's an overnight thing, but since companies know that they have a little insistence, they take a little bit more risk. It's just like if you have a steady income coming in that you don't have to work, you're going to be a little bit more selective on your jobs. Miss Butterscotch said, then give them the money to those Americans that are employing. Yes, I believe she's talking about why should we bail them out? We should, uh, why would we bail out overseas cruise lines when we should be bailing out our own people that we are employing? Kendra says, one thing people's miss about most corporations, they pay taxes by collecting from the employees. Yes, they collect all, like when I charge somebody sales tax, that money don't go straight to the government. That money comes to me. Then I have to pay that to the government. So you're right on that. Eric Joseph, what are your parameters for buying a house? I'm trying to get something I can rent out in 5 or 10 years. So you're looking to buy the house and then sell it? I mean, then rent it out? Is this a rental property or is this a house you're trying to buy? My parameters for buying a house, it depends on your income. Is this your first home? Is this a primary home? It's a rental property. It can change, right? If it's just a rental property, you can get something cheap in a high cost, in a high volume area. What I mean by high volume is that people move. Maybe it's a college, big corporations come and go, something like that. Bianca said, congratulations. Everybody's giving me a round of applause. Steven's giving me a round of applause. I can't remember what I said. Congratulations. Mega thumbs up. What everybody's giving me congratulations for? Congratulations. Keep grinding. I've been talking so long. By the time I'm saying that y'all saying congratulations, I can't remember what I said. Parameters. How old? Number of bedrooms. That depends. Is it a rental property? My first time, like me, right? I'm buying a primary home. So me, my easy parameters, bare minimum, I gotta have 3 bedrooms. I need 2 baths, and preferably a built-in basement. So I gotta have 3 bedrooms, one for my son, at least a guest room, one for myself. That's at least 3 bedrooms. Of course, the master bedroom is going to have a bathroom, and we at least got to have another one. So at least 3 bedroom, 2 bath is in a standalone house is the bare minimum for me. Indu from San Diego, please be safe and healthy. Yes, yes. He said, what do you think about AAI, American Airlines, is keep going down? American Airlines was one of those companies that was filing bankruptcy. I don't know how many times. It was either American Airlines or United. I think it was American Airlines that was filing in and out of bankruptcy, so I don't even mess with that one. No. If I buy individual stocks in the airline industry, it's going to be Delta or Southwest. Tech Monkey, do you think Ford is going to make it? Didn't they back Rivera Electric Company with Amazon? I'm not sure. I don't like Ford. They're not on my good list right now. They got a belt out. They got a bailout last decade. Stock didn't perform that well in the bull market. Then they cut their dividends. No, too many other things. I'm not looking at the struggle bus. I'm not in a position to where I'm drilling down trying to find, they call them like the cigar blunt investors. It's like a cigarette that's thrown away. I used to do this when I was a kid. It was disgusting. But I used to look at a cigarette that was half smoking, and I would try to smoke it. I'd be like, oh, as a kid. So that's what you're kind of looking. That's how I kind of look at Ford. It has a little puff of smoke. Buffett calls them the cigar blunt something. And he tries to get one puff out of them. But when you do that, no, I'm not. Why am I going through a cigarette Why am I going through an ashtray trying to find a washed up cigarette when I can go in the store and get a whole pack? Brian said, I understand. Thanks, Prince. No problem. He was talking about the unemployment. Elijah, speaking of CEOs, what do you think about all these CEOs stepping down all of a sudden? I don't really know what it is personally. I would assume maybe because the economy's doing bad, and now it's hard to it's easy to navigate a ship on autopilot, but it's hard to do it when it's falling down. So, and what I was saying about it, when it was in a bull market, it was very easy to keep a company going, but now hard times have came upon, and people may find it a little difficult. Miss Butterscotch, she says, "What do you think about?" Okay, she has the same thing, but yeah, that's my kind of thing on it. Great minds are like, okay, I see that. Okay, so I really don't know. I've seen that. I heard people talk about it, but I don't have any knowledge of why or whatever. Only thing I can think of, maybe it's hard right now. How are you feeling about CRX? They're really puzzled after their 110 RS. I'm guessing he's talking about their reporting resistance. I'm not going to look into that one right now because we got some more comments. I don't want to pause everybody else out. News just broke. Carnival is seeking $7 billion. JP Morgan is talks with them. Wow. Carnival is trying to get, they're going to get bailed out. Why would you bail out? Come on, Carnival's going to get bailed out one way or the other. Oh, I see what everybody's saying. Congrats. Congrats. You're having superstar guests on your show. Oh, see, you got to think about it, guys. I've been around. This show is actually 7 years old. And a lot of what people are thinking is new is really, a lot of people are thinking is new. I'm just bringing people back that I've already known, that I've already interviewed before, but I'm just bringing them back at a different level. That's it. When they probably came on or when I started talking to them, it was different. So I'm glad that y'all see those guests. So yes, that's the goal right now. We're gonna have the first guest on Meta noon. I think it is noon. Y'all see it. So he's supposed to be on. He confirmed, and Yahoo Finance just confirmed. Um, Dr. King is coming on to talk about COVID-19. And if I had let me ask y'all this question: if I had a doctor come on here, medical doctor, John Hopkins graduate, medical doctor come on here, what would y'all like him to talk about? That's why I've been kind of struggling about it. Gary Wallace, another great video as always, coming at you guys and girls with another awesome video. Elijah, yes, it does. Elijah, when looking for individual companies to invest in, what are some key metrics that you personally look for? I look at it this way. Let's break it down to a simple way of how I like to look at a company. If you had a friend or a family member that called and just said, "Hey, can I borrow $1,000?" And let's say you need this $1,000, but you don't mind letting them hold it, right? Right when the first thing that comes to your mind, you do a quick assessment of the ability to pay it back. They're like, "Hey, I'm gonna pay it back before your rent is due or your mortgage." Would you let that person hold it? The first thing that's going to come to your mind, you're going to wonder, what is their income situation? Did they lose a job? Are they going to get a new job? Do they have money? How much cash do they have on? Those simple things that you ask is what I look at stocks. When I look at a stock, I want to know uh, if I'm looking at an industry, who's a big dog in the industry? You know, uh, what you call it? When you're looking at the reasoning, when I'm looking at all the reasonings or whatnot, right? I look at how much money does a company have? How does it compete with its competitors? How does it compete with the big dogs in that particular industry? You know, uh, is it a profitable company? How long has it been profitable? Is the money continuously piling up? Those are things, simple things I look for, Elijah. So I don't look at the company and be like, "Oh, Nike, I heard of them." Yes, I like to look inside the company. How do they look compared to Adidas? How do they look compared to Fila? Brooks Running Shoes. It might be another company out there. So I may look in that industry and I compare them with the industry, how much money they have, all that other good stuff. Michael, for a first time investor, is it better to buy a little bit in 8 and 10 companies or buy 1 to 4? I would say 1 to 4. If you can break it down to 1 to 4, you're much better. You can make better selections versus trying to get 8, 9, 10. How we black people can get quality healthcare in this country. How can we get quality healthcare? How we black people can get quality healthcare in this country. It's kind of a loaded question, that Miss Butterscotch. I'm kind of lost on that one. See, I like the way you think. Okay, Tech Monkey Prince. I appreciate your willingness to help us out. Chill on some of the reason and common sense. Blessings to you. Yeah, okay, I got you. I got you. Miss Butterscotch said, I also love for them to speak about the vaccinations and how they affect us. Yes, you're right, right? When I look at the industry itself, I'm not too keen on vaccinations and one vaccination for all. Everybody just qualifies for the vaccination, the fluid vaccination. Then they come out 5 years later and say, oh, if you got the COVID-19 vaccination, uh, can you please call 1-800, or whatever, or all these type of side effects? I'm not big on that. James Bond, I don't think that $3 trillion stimulus will be enough to revive the economy. The COVID-19 must be under control to create control spending and the fear spending, to control the fear spending. I believe I'm right there with you. I think the stimulus package at two trillion, but I believe you. I used your how to open a TD Ameritrade account for kids last night and open up my son's an account. Thanks for the video. That's what I'm talking about. That's how we'll change in the future. I don't like to get caught up in today. I don't like to get into like some people get into politics. How can we change things today? I look at it and say, you know what? I'm 35 years old. I don't know how much longer I got left on this world. Let me figure out the best way I can learn and change the next generation. And what he just did, Abraham just did, I just sit back and think, what if my dad had opened up a brokerage account for me and started investing for me? Would that have changed my and my brother's life? Right? That's how we change things, right? Oh, I'm so stupid, Miss Butterscotch. I'm so sorry. She was asking those questions like if I had the doctor on your show. Yes, it's Dr. Lionel King. He's a Johns Hopkins graduate. He had his own practice. He had his own family practice for 10 years, and he sold it for $10 million. And he has some. He's an author. He's done some great things. I know him some years ago. I've already reached out to him. He said he's going to come on, but I was trying to think of how was I going to shape the show. Okay. Proud that you missed me earlier, but here it is again. Man, you cracked me up with the phrases of the struggle bus. I probably did, because when my comments come in, I'm going through the comments. Sometimes it'll just jump, and I may end up missing some. So I'm very sorry about that if y'all see that, right? She said you have a lot on your mind. Yes, it is a little tougher on this end when I'm going through everybody's comments, and by the time I get down your comment, I'm like, what are they talking about? But yes, you're right. Dr. King, I will ask Dr. King about that when he comes onto the show. All right. She said, I have a lot on my mind. Dervin Smith, were you surprised that the market opened in the red today based off the whole week was in green? Come on, Dervin Smith. If you tune into the show, ask everybody else in this comment section what they thought. Was I surprised that the market went down today? Now, Monday and Tuesday, or Tuesday, Wednesday, all this week, we was rebounding. All of a sudden now, CNBC comes out and says, hey, it was a head fake, right? Now it was a head fake. It's kind of funny how that happened. And we're going to look at that, right? So let's take a look at that. Here we go. I'm going to show it to you guys and girls. I got the message right here. We don't have to talk about it. I can show it to you guys and girls. Oh, look at this. Came out on Tuesday, right? March 27th, March 17th. Stock market live. The stocks rebounds on stimulus hopes. The Dow is up 1,000 points. Everybody was talking about how we was rebounding just a week ago, right? Just earlier this week or last week. Oh, we're rebounding. Then all of a sudden, now people are starting to say, oh, it was a head fake. And this happened before. Let me see if I can find that article that CNBC put out. Y'all give me 1 second. When they was talking about the head fake, I thought it was hilarious when I saw that. Okay, so the Dow is kind of rebounding here, some of his losses. Okay, here we go. Let me share this with y'all. The head fake. I can't make this up. I almost died laughing when I saw they called it a head fake. Here you go. Megan Fitzgerald. I don't know Megan Fitzgerald, but it was hilarious. Head fake rally are common during a bear market. This came out Friday today, right? Friday it came out this morning, 6 hours ago. Head fake rallies are common during bear markets, and this could be one, right? And all the way down here, she gave some good data. I do like when she did this down here. Where is it at? The story for I'm not getting no. Where is it at? I can't find it now. But it was down here where she gave some good data when she was talking about how the company had did head fakes in other bear markets, like how I did it in 2008, stuff like that. But I thought that was called a head fake. This person said no. She exactly. She said nope. I will keep telling you guys that it will drop some more. Right. All right. Let me get some of y'all more comments. Oh, what's going on? Okay, there we go. He said, I'm tracking Fridays are typical red days. Yes. And we got some more next Friday, guys. It's not about you can't react to the market. You have to be in front of the market. Next Friday, ladies and gentlemen, we got the unemployment report. Next month, next Friday is a new month. We roll into April. In April, they're going to be talking about economical stuff, right? We're going to see those corporate earnings. We're really going to see how much is Carnival hurt. We're going to see how much is Apple and Microsoft. They come out early May, but all these big corporate earnings are going to start rolling out come mid-April. Al said, yes, most likely continue sliding, but nobody knows the bottom or the top. You're right, Al. Nobody really knows. Tracy Walker, how will money going for the stimulus payments affect future Social Security payments? Planning, we probably won't have no Social Security. They're probably just robbing that thing. We probably won't even have none. You know, Mr. McDonald from Facebook, he said, I thought it was a rebound until I turned into print stream on Wednesday, and he said everyone was crazy for thinking this was going to be a full rebound. And I could this is just me using common sense, right? Everybody was ooh. I said, man, we haven't even. How could this be a rebound when we don't even know the effects? We don't even know how much this is hurting by right now. How could this be a true rebound? Al said, yeah, the market gives a head fake, then a middle finger. He said the market gives you a head fake, then the middle. That was a good one, Al. That was a good one. Jess, Joda E. Why do you think the government waited so long to implement shutdowns, quarantines? Those of us were watching things closely knew how bad it was about 2 years ago. Could you ask the doctor that also? You know what? I'm going to bring him on live, and y'all going to be able to ask him those questions too. Ask some good questions. As long as we're, I mean, I got a pretty respectful audience. I don't have a problem with you guys' questions, but great questions. I think I'm gonna title that episode something with the pandemic, how to stay safe. Questions on the pandemic. I'm gonna have them bring up. So probably have them come on next week too. McDonald says, really happy you deterred me from investing this week when everything was green. Thank you. See, nothing wrong with that. Mr. McDonald over there. I can't say your first name right, so I don't want to butcher it. Al, if anybody's trying to buy long-term stocks, look into SWXS. Great spread sheet. Also, it's the lead of the 5G coming next couple years. Okay. Write that one down there and look into that one. You said SWXS. Also Qualcomm. QCOM. QCOM is Qualcomm. And I just said the 1% robbed everyone's 401k. Now they're giving everyone a $1,200 check. Wow. Some people say that too. Our 401ks are not really there. They're just numbers, and they took the money from that and doing something else with it. Right? Al, forget about Social Security. You need to make it yourself in this free market, equities, real estate. Yes, I think Social Security is going to be gone unless you're getting that thing in the next 2-3 years. I think what we're paying now is like the people that are paying now. I think I'm paying for my dad right now, and I think by the time I get there, it'll probably be gone. The thing will probably be looted so bad by Congress, borrowing from it. It'll be crazy. SWKS. That's what I said, right? SWKS. Okay, got it. All right, ladies and gentlemen, boys and girls, that's all for the comments today. But just remember, we went over today. We talked about the rebound that everybody was kind of saying that would come, right? Okay, so it's called Skyworks Solutions. Okay, he went on record. He said it. Skyworks Solutions. I haven't looked into that. I haven't heard that coming. I heard of Qualcomm, but I haven't looked into that. But the thing about it today, stay safe with investing. Let's hold on. Let's take a look. Let's see what these unemployment numbers look like. Let's take a look at what these corporate earnings start to look like. And let's continue to build our watch list and save our money. Who cares? Who cares if you don't pick the exact money? Say if you don't, who cares if you don't pick the exact what you call it? If you don't even pick the exact bottom. If you don't pick the exact bottom, who cares? 5 or 10 years from now, um, like Amazon, I think is even in the down economy. I think even when Amazon was at its peak, it was $2,000 a share. Do you think the person that brought it for $300 and the person that brought it for $600 are mad? No, they're not. They're not mad at all. They're like, okay, I could have got a better price, but I'm not complaining. So that's why you shouldn't be overly concerned about the bottom. So you want to look at not look just looking at the price, thinking that's an investment, waiting for your proper time. And I don't have no problem if somebody says, "Hey, Prince, you could have got this company for cheaper," or whatever the case may be. Maybe I could have, but it doesn't. Um, I'm not mad because I didn't get it or whatnot. I'm just gonna look at it and say, you know what? I just wanted to make sure I read the data first. Anything wrong with that? If I'm wrong for waiting on data, so is me. But anyway, ladies and gentlemen, we talked about those jobless claims. What do they mean compared to unemployment numbers? The unemployment report that's coming out next Friday. We talked about the economical stimulus package, how the market reacted of 2008, and the second stimulus package of 2009. We talked about the current stimulus package. So, with that being said, um, we're gonna get ready to head out of here. Jim. Oh, there go my guy Jim from Toronto, Canada. There you go. Prince, you're the best. Appreciate it, man. Thanks. But and y'all stay tuned for next Monday. That's probably my next live show. We're gonna have Meta World Peace in here live, right? And then we're gonna have have Dr. King. I'm taking and grab him on next week. And we're gonna have Andy Soar from Yahoo Finance come on too. Right? So we're gonna have a medical doctor in the field come on. We're gonna have Yahoo Finance come on. We're gonna have NBA champ, 18 years in the league. We're gonna have him come on as well. So um, hopefully they end up to that's I don't like talking about we've been on here for an hour and something. I know the people that's only tuning in and listening now are hardcore fans of the show, but I very rarely like telling people who's supposed to come on because things happen. You know, things happen where people say, "Oh, he's," people may things happen. People get sick. People may get the corona. Or, you don't know. People change their mind or something happens. Something comes up. Whatever. So, but if they stay to theirs, that's my plan. At least that's what's on my schedule. So anyway, ladies and gentlemen, boys and girls, and children of all ages, until the next video, podcast, cartoon. Hold on for a second. I still got two more comments. These are gonna be the last ones. Max B, we spoke about transportation, but do you think any good eats? Ooh, we already gave that out, Max B. I'm about to give it to you now. Y'all give me 1 second. Give me 1 second, ladies and gentlemen. I'm trying to look up the energy sector. It's XTN, I think. But give me a second. Let me look it up. XTE. Nope. Yes. XTE. That's the energy sector, right? XTE. Energy sector for the whole entire sector. And I'm not going to lie, Max B. I did look into that sector and I thought about trying to get into that sector or whatnot. But I was looking at those companies. It was too much gas. I mean, it's too much oil in there. I wasn't too big on oil, and I'm like, the number one company in the energy sector is Exxon Mobil, and I think Chevy is number two according to market capitalization. And I was like, nah, you know what? Here you go, Max B. I'm gonna give you something right here. Here it is. This is how much I was looking into it. It's actually up on my computer right now. Right here, ladies and gentlemen. This is the energy sector of the S&P 500, right? So right here is Exxon's at the top. You got Chevron, then you got Royal Dutch. I don't like those two oil-based companies. So if I was to get anything, I'd probably get this entire sector because I think this sector is going to rebound the best when we get back out of this crap. But I don't like that whole oil, and that's the only thing that keeps me away from it. So yes, I was actually looking into that, doing a little research on that too. But anyway, ladies and gentlemen, boys and girls, and children of all ages, I'm about to get out of here. Right, my lips are getting dry too when I talk a lot, especially I guess up in Colorado. But anyway, ladies and gentlemen, boys and girls, and children of all ages, until the next video, podcast, cartoon, or whatever else y'all see me do crazy around the globe. Peace. Be safe. I'm out.